Yeah, it's just a big disaster. It's a big black eye for crypto, but it's also in a sense good for projects like mine that are truly decentralized, that are non-custodial, that are using open source contracts, that are owned by the user base and completely open source, completely transparent, using immutable contracts. It really gives a nice platform for my project and platforms like mine to say, hey, we're the solution to this. We've been around. You could have been using us, and it gives opportunity for us to continue to build in that direction. In the short term, it has a negative impact for all crypto projects and all DeFi projects. But my project, Animal Farm, animalfarm.app, is literally the solution to decentralized lending. And all these other Three Arrows Capital, Celsius, all of these other closed source, custodial, non-decentralized lending platforms that went under for reasons that are impossible to happen on our platform, such as misallocation of capital, such as lack of transparency, all of the issues that took them down. Becoming illiquid. Becoming illiquid is not possible in our platform because the user is the only one that has custody to move their tokens off of the contract. So there's no situation where we misallocate funds and now we're illiquid. So we are largely the solution to a lot of these issues, and I'm going to continue to develop decentralized products that take the current issues in traditional finance and decentralize them and make them open source and make them immutable. That's really my goal. And then if we're going to talk about the overall crypto market, Bitcoin is $16,000 right now. I started dollar cost averaging into Bitcoin at around $18,000. I see anything under $20,000 as being attractive, not to go all in, right? And when I say all in, obviously you never go all in, but when I say all in, I mean all in to your allowed risk tolerance. Don't even do that, right? I like to do, for my long-term positions in Bitcoin, for example, I like to add to my position over time, dollar cost averaging, anything over an 80% correction in the Bitcoin market, assuming that the fundamentals are still strong, assuming that it's just regular market cycles and there isn't some crazy outstanding thing that caused that 80% correction. That's when I start dollar cost averaging it. And I made a rather large purchase at 18,000. I bought a few $1 million worth. Again at 17,000. And I would likely do another purchase around 15,000. And I'm looking to buy all the way down to 11,000. If we start to drop below 10,000, then I may have to reassess the situation. But because then we're starting to break historical norms. But historically, this kind of correction is very normal. And whenever these kinds of corrections happen, it seems like they're happening for fundamental reasons. And that is true to a degree. But these cycles were going to happen anyways, and these cycles trigger. They wash out the bad money. When the shore goes out, you see who isn't wearing any pants, and that kind of thing is happening right now, and it's causing a further correction in the market, which is absolutely expected, and which is good for people like us that have dry powder that we're waiting for this to happen. And then as far as where I look for profits for my macro long term, that is when the price is 3 times over the previous all-time high. So historically, Bitcoin, when it breaks a previous all-time high, has gone over 3x the previous all-time high. So the previous all-time high was 20,000, and then this all-time high was 60,000. So Bitcoin went from like 1,400 down to $800, up to $20,000, down to $4,000, up to $65,000, and now we're having this major correction. And I would expect the next long-term top to be somewhere between 120 to 120,000 or higher. Of course, you expect these cycles to tighten as the capital pool gets larger, right? The momentum is you have more momentum, basically the momentum weight of capital, or the weight of capital. As the liquidity pools get larger, it's harder for larger price moves to happen. So historically, 3x, but I would look for a tightening of that. So I'm looking to take profit on the next bull run, somewhere around 90,000, 100,000. I'm going to look towards my short-term trading systems to kind of to tighten where exactly I'm going to take profit there, but that's going to be the general area. And dollar cost averaging in, and I'm not over leveraged, right? Don't use leverage. If you use leverage, do not use more than 2x leverage. I would say just stay away from leverage altogether. And because I'm largely staying away from leverage, over 95% of my positions in crypto are non-leveraged. I'm okay with even a 50% correction from here. It's 16,000. If we do a 50% correction, I'm cool with that, because historically we do 3x the previous all-time high. That's going to take us up to 90,000, 100,000, 120,000, somewhere around there. and that's like a 800% move from here.